Good morning and welcome to this weekly market update from AGM Markets. Today is the 25th of July 2012. What we'll do today is go through Euro dollar cable, dollar yen and Aussie dollar, just trying to give some sort of a weekly outlook and a slight review of last week. And yeah, just update on the markets and what we'll be looking at in the markets. We'll not make any trade calls recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com. And for any new followers, we have 3 moving averages on each of these charts. The red one is 55 simple, purple is 100 simple, and the gold is a 200 simple moving average. Okay, let's have a look at Euro dollar. Euro dollar's been selling off very aggressively last week. The sort of last sort of 3 weeks we've had a good sort of, from 26.50s all the way down to 24.43. So we've fallen 600 pips in 4 weeks. It's a very big sell-off indeed. Spanish yields, the bonds and yields skyrocketing past 7%. It's just not a pretty situation in the Eurozone at the minute. In terms of the technicals on this weekly chart, nothing much of interest. Only level that I am interested in, which we said about last week, was the 2010 low, which stands at around 1870, and that's there. You can see that indicated by that red line there. Approaching that, it's getting very near, and also you have to keep in mind the 120 handle. Let's just thicken these lines up a bit. $120 handles always can get some sort of reaction. You can already see this week, today's Wednesday, that we have come just shy of this 120 handle. This current weekly candle is looking like a nice reversal, and you got to think, we've had 3 bearish weeks, 600 pips is due some sort of retracement. So it looks like it's already starting to retrace, and the level, if you shorten up to a shorter term chart, you can, if you look at the even the daily here, you can have a look at the fibs from that recent sort of swing high there down to the lows and look at the 50% there, or you can go on the 4-hour chart. The 4-hour chart out is the same fib, or even the 1 hour. So I have to do that fib a sec. Or the 1 hour, the sort of recent areas, recent sort of swing areas. So from that high there, if you flip it to the 1 hour chart, that's the high of the chart, and that's obviously quite good to look at. So yeah, so this current 1 hour chart, we have the fib from up there down to the lows. Just sticking the line up a bit. Don't know what's anything for. Too thick, just thin it up a bit. There we go. Yeah, so the 50%, this is the 1 hour chart. 1 hour chart's a good one to look at if you're trading them today. The 50% comes in, the reason I don't normally have the 38.2 or 23.6 is because I generally prefer a more of a healthy retracement to look in for selling opportunities. Although if we do add the 38.2 on this chart, it may well be at that level currently, so we will leave it. I'll put the 38.2 on now. I wouldn't be surprised if it's at it already. Surprise, we're pretty much testing it. And also it's coinciding with a 100-hour moving average. So the 100-bar moving average on the 1 hour chart. So key sort of selling zone at the minute. You already see sellers have come into the market because that's a nice sort of confluence zone. Confluence basically means 2 sort of indicators at a similar price level. So we've got the 38.2 and 100-hour moving average at a similar sort of price at the 1 spot 12. You can call it 1 spot 20 on 50s really. So key area of interest here. Are we going to bounce up and get above, or are we going to come back down? So if we get any sort of decent reversal candle, which we kind of had there, but it hasn't followed on, then we could come back and test the lows. So the bigger term players are always going to be looking at the sort of selling opportunities. But as I said a minute ago, if you look at that daily chart or even the weekly, it does look like it wants to have some sort of decent retracement. But if we do come down and break the lows, and that 118 is the key level to look out for, in my opinion. Just thicken it up a bit. If we have a look at cable, we've got the daily chart here. Actually, let's have a quick look at the weekly. On this weekly, we've spoken about before, we're kind of in a sort of symmetrical triangle. There's a lot of symmetrical triangles on a lot of these charts, actually. Trend line support there, and trend line resistance there, playing it inside the channel. So this is the weekly chart. I'm not too focused on the weekly, although we are starting to bounce. I mean, 2 weeks ago we had a lovely sort of reversal candle, which we said about in last week's video, and you saw it a nice little bounce up last week's candle as well, where it looks like it is retracing down a bit today. That's mainly this week, sorry. We did have some weak UK GDP data out today, came out minus 0.7%, so that is hindering on the pound currently. If we flick it on a shorter term time frame, where if we flick it to the daily, also another trend line support there, and we have another trend line resistance up here, which is also playing sort of kind of mini triangle playing inside that. In terms of the moving averages, see the 55-day moving average kind of held there, and now we're below that 55-day moving average. So that's a key sort of moving average I'd be focused on the chart. If we get any sort of bounce up, then you get sellers coming in that 55-day. And if we close above it and then close above the symmetrical triangle, then you've got the 200-day moving average and then the 100-day moving average to get above if we want to get to this other side of that symmetrical triangle on the weekly. In terms of the 4-hour chart, if we flip on the 4-hour, the first thing that comes to my mind will be the bounce off here and the fib from lows to highs. What level is it bouncing off? Is it a kind of fib move? And yes, it is a fib move. Surprise, we get a nice bounce to the 78.6 here. So interesting reversal candle. If we get a nice reverse off this 78.6, then it could be some good sort of buying opportunity that a lot of people will be looking at. If we do get any bounce up, then you see we've got a very good cluster of moving averages up here, which you can see held around this previous area here off the 55 and off the 200 there. But now we're below them, we are in selling territory. But as I say, if we do get a bounce above, and we get up to these sort of areas, then this will be kind of sort of key sort of selling zone. And if we have the reverse fib from up there, from the highs to the lows, let's say we do bounce, and surprise, we've got confluence area already at the 38.2 fib retracement. So keep that one in mind. But yeah, the focus currently on cable for sort of intraday moves would be this 4-hour move. What's going to happen at this current candle? Okay, let's flip to Dolly N chart. Still not a massively interesting chart. The only thing really, in terms of the fibs, I can't remember if we draw a fib from the lows to the highs here on the daily chart. Did actually get the bounce off that 78.6 just down there, you could see, but it did kind of struggle to get momentum. We've got caps at the 100-day moving average there, then we've got some bounce at the 200-day moving average there, but we're now below that, so it looks like it's wanting to come down and test this 78.6 Fibonacci retracement level, which comes in at the 77.55 level. That's the only real thing I've got of interest and honesty. But actually, no, another thing for the moving average crossover players. You see previously we had the cross the 55-day moving average crossing off the 200-day moving average, and that got a nice sort of momentum to the upside. You can also see currently it's doing a similar thing down here. The 55 is crossing down below the 200-day moving average. So keep an eye out on that if we get any sort of stronger momentum to the downside. We'll have a look at the last chart. This is the Aussie chart, Aussie dollar. Nothing too much of interest on the weekly. If we look at the daily, the main bit of interest would be this. We have a nice sort of uptrend going on here, which is holding quite well. And in terms of the fibs, is there? I mean, we're starting to get a sort of strong bounce off here, risk sort of appetite bounce, and no, nothing massive of interest on in terms of the fibs. Only thing I would keep an eye on the daily would be the trend line from up there. So if we get a breakout to the upside, if we flip it to the shorter term time frames, actually move this in a bit. So what about there? You can also see actually in this trend line we've got this 200 bar moving average on the 4 hour here, so keep that in mind. I mean, the sort of recent was this a fib move? It looks like it could be a 78.6 or an 88. Yeah, bang there. Very similar to cable. A pure fib move, recent swing low to the highs, come down, bounce straight off the 78.6 and the trend line support. We're starting to get a nice bit of momentum, but it looks like that the 38.2 is trying to cap here, and that coincides with this sort of area around here to your left. A previous resistance zone coinciding with the new fib always acts as strong resistance, and that got proven just around there. So if we do get above that 38.2, then we can look like we want to take out these highs at the 0% line, which comes in at one spot 0.44. Okay, it's time for the charts. Have a look at the Forex calendar for the rest of the week. So Thursday, tomorrow, what have we got? Tomorrow 1:30, we've got the core durable goods out of the US, and we have weekly jobless claims, and 3 p.m. we've got US pending home sales, so quite a bit of US data out there. And on Friday, big piece of data is the advanced GDP from the US, forecast at 1.5%. That's kind of following on from today's UK GDP. That was very, very weak. That's a big miss on that number there. So I mean, this week's been quite. Actually, no, on Tuesday, had quite a bit of data out, a lot of PMI numbers, but not a huge week in terms of data. For the rest of the day, out at 3 o'clock, we got US new home sales actually. That's forecast at 372,000, previously 369,000. No, not a massive week in terms of data, but there's still plenty of movement out there in the market. So yeah, keep an eye on the economic calendar as always. But yeah, I hope you enjoyed that video. Have a great week trading, and I'll catch you next week. Thanks for listening.